All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Friday, March 24th, excuse me, not 21st, 24th, 2023. Hope everyone's having a nice morning. Let's go ahead and get around the horn. If you haven't already, make sure to subscribe to our channel. Bottom right-hand corner of your screen, little black logo. Click on that. Like our videos, share them, comment with any of your questions. We appreciate it as always. Seeing a little bit of a bounce here in the market. We were a little more bloody earlier today, this morning. Dow futures down 224, Nasdaq futures down about 48, S&P 500 futures down about 22, bouncing off that 200-day moving average, key level that we've been watching for a little bit. Now Russell 2000 1717 down about 0.88%. I went ahead and posted on our Discord and our Twitter some unusual options activity on IWM for April 21st expiry. I think it was the 165 puts and the 164 puts. They had a lot of volume, so I played those on my own. I have them running. I did not send them as a signal since we had already did two that day, so I didn't want to just push the risk on for no particular reason. It's good to take a step back when you're doing very well in trading. You don't want to just keep pressing when there's really uncertainty out there. So obviously a higher risk trade. Crude oil down about 3%, 67.85. And again, all of this move down today was really about Deutsche Bank. Their credit default spreads went higher in value. Excuse me. So what does that mean? That means that the insurance contract on their debt or their credit solvency is gaining in value. Let's put it this way. I know everyone loves analogies. Let's say you have a car. You have a very nice car, very fast BMW M5. And the problem is that you love to speed a lot. So the value of your insurance contract of you getting in a car accident because of your speeding will be more expensive or higher in value. That's why insurance companies, they have to go by your driving record. They also have to go by your FICO score and your age, your gender. Where do you live? Is your garage parked? That's the same deal. It's really just insurance. So the value of those insurance contracts that are meant to insure Deutsche Bank's, I believe, credit portfolio or asset book is gaining in value. That's not a good sign. That means a stress in the market, that the market is seeing that Deutsche Bank may be the next shoe to fall. I wrote that as well on a comment on Instagram about a week ago. So we posted that as well. So again, I've always been kind of wary on Deutsche Bank in terms of their derivatives book. I've said that many times on YouTube, about a couple years ago. And Deutsche Bank just tends to survive. You know, this is the largest bank in Germany, one of the big pillar banks in the Eurozone. Think of them as a UBS along that line on how important they are to Europe. I don't know the big French bank in terms of England. I would say Barclays would be the big one, I assume. But with that being said, again, those headlines are obviously causing a little bit of weakness in the market, especially the banks. Bank of America's down. We traded Bank of America puts yesterday, and we caught them yesterday. So well done to the team. But we know that IWM has a high concentration of what two sectors? Energy and banks. So again, if banks continue to fall like the Republic Bank, the other regional banks as well, IWM will get a hit. And the reason in regards to IWM, looking at it on the weekly chart, you could see how important this level of support is, which is right around 165. That is right near the October lows. The spread between QQQ and IWM in terms of relative strength is absolutely been just hammered or actually soaring, depending on the ratio that you look at. But the point is that Q's technology is now becoming, in a weird way, a safe haven in this environment where the confidence in the banks is shaky at best. So again, looking at this level here on IWM, I know, pardon my lines, just put the Fibonacci retracement lines. You can see that I had an alert placed at 168.61. We are now testing that level. So there is a gap to fill at 165 that has already been filled back in June of this year. It retested again in September, and then we had an upward trend. But you can see this upward triangle broken down. So it's a really good setup. I like it. There was a lot of volume on it. I don't know if I'd get into it today or anything like that, but that's definitely going to be something on my radar today. As you can see, just a clean breakdown on the daily on IWM. So I have no problem shorting the banks. I have no problem shorting small caps, whatever it takes, guys. We don't have to be long every day. We don't have to do Apple calls every day. There's other opportunities out there. Gasoline futures down 1.63%, $2.52. Gold futures above 2,000, 0.44%. We talked about gold ad nauseum. Remember when it was chopping around 1,700? We talked about that was a good level if you want to own some gold. I don't do gold futures just because the margin is so expensive, and gold coins, to be completely honest, is not really my thing. But again, there's other individuals out there who like to trade and like this information. Well done if you did play gold. Again, what is the big driver in gold? It's the dollar, right? But the dollar is up today slightly. But yesterday, and look at the trend in terms of the actual dollar. And we talk about the dollar all the time. Dollar did bounce today very, very nicely off that 101 level. But again, still relatively depressed in terms of being down. It is below the 50-day moving average. It is below the 20-day moving average. We know that's our momentum, right? Moving average, below the 100, below the 200. I mean, the 100-day sliced below the 200-day. We already had the death cross back in January. So we've been talking about how the dollar is going to continue to go down, and that should help commodities go up. Now, here's the kicker. If the Federal Reserve decides to actually cut rates, again, the assumption, the dollar is going to go down in value. That may give reprieve to the stock market, sure. But when it comes to inflation, that's inflationary, guys. So we're going to be back to where we freaking started, if that's being said. But the stock market will like it. It will get a sugar high, just like it always does when it gets a cut. But doesn't mean we can't trade around it. We can trade around this. Again, know the rules so you can master the game. Just prepare for that. The dollar being a key driver of commodities. Copper futures down about 1%, even with the dollar being higher. So gold is more of a safe haven because of the Deutsche Bank headlines. Same thing with silver. Not really dollar based. Dollar yen, that's going to be more for yields, like we talked about that correlation on Twitter yesterday. 130.14, down 0.54%, about 70 pips. Pound dollar down about 66 pips, 122.21, and 107.46 for the euro dollar. Euro dollar being down, we talked about that being a very tight correlation with the S&P 500. The S&P 500 is down about 0.59%. Euro dollar is down about 0.8%. Bitcoin kind of holding firm, even with these bank headlines. 28,000 on the contracts, 1773 for Ethereum contracts as of price right now. And the volatility index is up 6% at 23.97. So we kind of went over a couple things. Bank of America we traded yesterday. There's still a gap to fill, guys. You could see it at 25. 24.96. I went ahead and also sent a masterclass trade on that. I believe it was the 25 puts for that same April expiry. There was some unusual options activity there in terms of volume. So we played that. I think we got as high as 70% on that. So again, I think the trend is still down, obviously, with Bank of America here. And we're going to see if we can fade any pops. So let's go ahead and get back to the broader market, kind of take a look at the S&P 500 futures, kind of give us a roadmap for the day. You can see here that we're starting to set up for possibly a bear flag. But we've talked about this for a while when we retested a couple of days ago, which was the 20th of March. But again, it's still been holding that trend line rather strongly as the 200-day gets very, very close. So again, as I look at the 200-day, we see we're bouncing from there. Do we want to buy into this weakness right now? Right now, I would say no, because I want to see if we can get above the 100-day again. And again, we talked about that 40-40 to 40-50 zone, 40-50 being that resistance. We rejected very cleanly. That was a place to buy puts. We did play puts yesterday as well. But in terms of the market right now, you're right in the middle. There's still some uncertainty out there. So it being a Friday, I wouldn't want to put too much risk over the weekend because bank headlines can change the landscape of the market rather quickly. And then you're either going to have pretty much calls that are going to be really depressed in value, or puts be really depressed in value. Just depends on the direction. And the problem with the weekend is that you don't have any control of your options. So it's probably best today to just walk into the weekend and enjoy your weekend risk-free. Don't think about having any open trades. In terms of your portfolio and long-term, that doesn't matter. But in terms of any kind of trades, swings like that, you may want to start winding those down today, especially with Deutsche Bank now having headlines. Who knows what's going to happen over the weekend? And that could change the market either really up or really down. And I really can't call it because we don't know. Good morning. Yesterday's power hour is unnecessary as SPY is bouncing off 390 to 394 back to the day's low. Let's go and take a look at SPY together. And again, you kind of have the tale of two cities here. And this is where it gets interesting. You also have a bull flag and you also have a bear flag, literally in the same area. How interesting. What does that tell you? It tells you that there's uncertainty in the markets. So let's go draw this trend line here, or this actual bear flag, and see if we actually break it. That's kind of what the market is looking at. Let me go ahead and mark this correctly. We're going to put, no, it's yellow. Yeah, is that yellow? Give me a second here. We'll go ahead and do this in red. All right, cool. Here we are. You can see the downward channel, or again, you can call this a bull flag if we would have broke out above 402. We didn't get there. We didn't settle above there. So now we have a possible bear flag. So it really depends on what the perspective is short term, and we have to see what happens. But right now, I wouldn't touch SPY at all until you really get above 395. And even there, I'd be a little concerned. The only thing that kind of makes me feel more bullish towards the top end, and of course, I have to reconnect. Oh no, there goes my TOS. Sorry about that, guys. Well, here's the trades for the week. Let's answer some questions while my thinkorswim just totally went kaput. Any weekend plans? No, just relax at home with the wife, and there's no F1 races this weekend, unfortunately. I will go see John Wick 4 this weekend. That's something I'm going to do. What do you think about buying CVS stock for long at these prices? Brano, to be completely honest with you, I wouldn't want to buy anything long-term here at all. I would actually just wait. The market's at an uncertain place. There's really nothing you can do at this point. So you really just have to just wait it out, man. If you're DCAing, just go for it now. But to try to time it at this very moment, I mean, anything can happen. And I don't think it's necessary to put that risk. Are you going to put any March Madness or Premier League? March Madness, not so much. Premier League, yes. But I haven't watched it lately. Only watched F1. Everything I've been reading is about the banks and stuff like that over the weekend. A lot of just weekend reading, Reuters, Bloomberg, stuff like that. Stuff I enjoy, obviously. Tesla. Let me go ahead and do this here. Oops, I got to sign up. Whatever. Let's minimize that. I'm sorry, guys. My TOS actually went down. It just totally went kaput on me. So I'm just going ahead and waiting on it to restart. And again, so real quick while we're here, here's the actual week of action that we had this week. Bank of America, Q's, Palantir, Apple, and Google. Google, Apple, Palantir, all hit in the money. Bank of America also hit in the money yesterday. Microsoft being the loser. We had to salvage that. That's just one of those trades you're just like, damn, what can you do, right? And it happens. We had it, and then on Monday, what happened? We freaking tanked, and there's nothing really you can do on that moving forward. That's just kind of the name of the game when it comes to trading, guys. You have to think of yourself as that point of, what's next? There's always another trade. There's always another bust, and we're just going to have to just go with that. Let's go ahead and get to this trade. I'm going to go back to TOS here. I had a question on Tesla. Oh, my stuff is messed up. Whatever. All my charts reset. Here we go. Tesla from Joseph. Let's go ahead and do this. Sorry for the technical difficulty, guys. It's got to bring up my ES. All right, let's take a look at Tesla. And Tesla was a stock that I was looking at as well to trade. It just never broke my alert. So the alert I have is 199.62, Joseph. That's the level I'm looking for. We're looking for a possible cup and handle formation. Downward trend, nice cup. Here's your handle, another one down, and you should go higher. So again, if the actual trend holds, 199.62 being that break, if you start getting above 225, that's where you have a possible NVIDIA setup where you're just going to get momentum higher to the next gap fill. If you guys remember, we talked about NVIDIA and we traded NVIDIA like crazy. How many gaps were filled? One was here, two was here, and then we had another one here on the weekly, the third. 3 full gaps filled on a long time horizon. That is a lot of gaps to fill over time. And the market doesn't like sharp moves. I love NVIDIA. You know me. I've said this in the 2023 top 10 stocks of 2023, excuse me, on the video on YouTube. Take a look at it. Right here on NVIDIA, guys, you're starting to get really close to really overbought. So if you have some profits on NVIDIA, it's probably a good time to start taking some. I hate to say that, but again, you're getting at a point here that you're getting extremely stretched. Stocks do not move 100% in 3 months sustainably. That's not how it works. So again, I would, if you told me today, what is your buy rating or sell rating on NVIDIA? I would say hold it if you hold it, if you love it, or sell it and for some profit. And I hate to even, and I love this stock, and I've owned this stock for a while now, but again, take some profits if you need it, man. I would highly recommend that, because you're getting to that point, guys, that you're getting way, way overbought. It's been up for almost 10 sessions in a row. That's a lot, guys. So just be careful on NVIDIA. Sorry about that. Square, I just wanted to say that real quick. Here's the next question on Square. Square there was a report came out from Hindenburg Research where the guy Jack is actually suing them for that report, because they're saying that Square actually has some fraud and it's a short, or they're shorting it. I'm pretty sure Rosenberg or Heisenberg, whatever, actually probably covered their position. I highly doubt they're actually buying more puts here or shorting more stock. But in terms of Square, you're looking at $51 as your floor. That's really what you're looking for. The good news on Square is that it actually has a big presence in Bitcoin, obviously with the Cash App and everything. So if Bitcoin does go higher, you do have a little bit of a tailwind for Square. Usually these short reports do come out and they kind of bottom out within weeks or so. Or it can be, like a Snapchat where every analyst hated it. I personally hated the stock and it actually cratered. So you're kind of in a place of indecisiveness. Selling here, I don't think it's pretty much worth it unless you really need the money, because if you can wait it out this long, then you should wait it out in the future if you really believe in Square. Would you short NVIDIA with the RSI so high? I don't want to short NVIDIA, the whole stock itself, obviously. Playing puts? Oh yeah, I do. I really, really do. And the level I'm looking for the break is 277. At 280, I'm gonna look at shorting for sure, at least at 270. The RSI is high. We talked about that, and I just broke it down in terms of how high it's gone so quickly. Guys, that is not sustainable. And again, as an NVIDIA shareholder, I love this, yes. But again, if you're looking to take some profits, if you need some cash, sell some. Sell a little, get some in your pocket if you need it. If you don't need it, who cares? Let it ride, and you can just DCA to your heart's content. But NVIDIA should reject around 280. And I'll be ready for it. I definitely want to short that thing. So maybe NVIDIA goes straight to 350 and I'll look down, whatever, that's fine. But semiconductors, like I talked about in that top 10 stocks of 2023, I said the semiconductor ETF, which is SMH. And again, you could see how SMH has traded because NVIDIA is its largest holding. It's pretty much from October lows of 172 to 258. Very, very similar. It also has AMD. AMD has absolutely been on fire. Semiconductors, guys, with AI, autonomous vehicles, all that, that's the new oil. So again, you're starting to get kind of a big rush into AI. A lot of people compare it to the metaverse. I think AI or AI in general would have a little more specific commercial usage than a digital playground, let's just say. Cool concept, don't get me wrong. I think it'll be accepted. But I think AI would be a little more, practical for businesses, which is what's going to make money. But in terms of the AI, you need the semiconductors to do it. NVIDIA is the best way to play it, in my opinion. Obviously, the market agrees with me because it keeps going higher. But again, it gets too hot too fast on a technical basis. That's all we're looking for. Doesn't mean NVIDIA sucks. Doesn't mean I think I hate it. I'm just telling you that, again, it just gets too ahead of itself. It's probably a good time to start taking some profits. We'll go ahead and leave it there, guys. Have a great rest of your morning. Apologize for that TOS mess up there, but it happens sometimes. We'll see you guys. Actually, I'll see you guys later today for the recap. We'll recap the session. We'll recap the week itself and go over each of the trades, and we'll see how the market does. And we'll answer your questions as always. I'll see you guys at around 4:15. See you guys then. Cheers. 4:15. We'll see you at 4:15 live. Cheers, man.